Hello my retro friends, thanks for finding my channel, Mike the Retro Realtor. Today we're going to talk about something that's not particularly sexy, it's not interesting, but in a transaction, in most cases it's very important. We're going to talk about the appraisal. So if you're buying a piece of property, and this is a cash transaction, odds are you're not going to do an appraisal for a single family or even a 4-unit. There's enough comps out there where you'll have an adequate idea of what the property is worth, and both parties can negotiate from there. Don't get me wrong, some sellers think that their property, which is only worth $100,000, will put it out there for $500,000. It is what it is, and when it doesn't sell, that's the market saying it's not worth what you think it is. That's the exception rather than the rule. In this market, most pieces of property that come to market are about what they're going to sell for. There's not a lot of negotiations for a single family or a duplex, anything you know, own or occupy. Most people just buy it at price or higher sometimes if there's a lot of traffic on it. But if you are going to use a lender and a bank is involved, there will be an appraisal. Now, with prices going up, the banks are actually on top of it, the appraisers are on top of it. We really haven't had a whole lot of problems with these appraisals coming in, and that's the term we use. The appraisal coming in basically says that the bank agrees that the property is worth the value of the agreed upon contract. So what is an appraisal? An appraisal is a third party hired by the bank to come through, take a look at the property through comps, condition, do an educated guess what the valuation is. So you put in your offer, it gets accepted. And if you are doing a finance transaction, in most cases you will have an appraisal contingency. Now I know some buyers right now are waiving the appraisal contingency, and that basically says we're going to do an appraisal, but if the property doesn't come in for value, the buyer does not have the right to pull out the transaction, and they would have to dig out the cash out of pocket to cover any shortfalls on the appraisal. That doesn't happen too often, and I understand why people are doing it. It's one less contingency for the seller to be concerned about. So as the buyer, you would get your accepted offer. Your lender would hire the appraiser through a pool of appraisers that they use. They're not supposed to talk to each other directly, but Milwaukee's a small market, we kind of all know each other anyways. The appraisal to most buyers costs between $600 and $800. This is generally paid out of pocket prior to the appraiser going out. So the appraiser would need to get access to the property and take some photos, runs all the comps, and make sure the property is worth what the buyer and seller agreed to sell it for. So there are a couple scenarios, and I'm going to look at it from the point of view as there is an appraisal contingency and what we call a right to cure. Right to cure means that parties can negotiate to fix a problem. So you just bought a house in Wauwatosa and accepted offer price is $400,000. So the appraiser comes through and it comes in at $400,000. Great, that contingency is checked off, we're moving forward. If the appraisal comes in at $420,000, that contingency is checked off, we're moving forward. The buyer will understand that the property came in at $420. That's a great feeling, but doesn't really mean a whole lot. The seller will not know this. In general, the seller only finds out if there's a problem with the appraisal, meaning it didn't come in. So let's go back to the original house for $400,000. It comes in at $390,000. You do have the right to cure. So the seller, who is pretty much married to this transaction, because at this point we're about 2/3 through the transaction, the seller is going to talk to you about how we can work this out. In this case, the seller and the buyer, because we have right to cure, can negotiate this. So for the simplest way to do it, the seller will lower their price $5,000 and the buyer will bring in an additional $5,000 to cover the shortfall. That's pretty much in most cases how it's done. I did have one transaction about 2 or 3 years ago where I had this house on the south side. Put it out there day one, I had 17 offers. Craziness. And this is before things got real crazy. This is about 2 years ago, 3 years ago. And it was an estate. The selling agent, myself, the sellers, and the buyers all thought the appraiser was out of line on this one. And we can't negotiate with the appraiser, but because this was a non-FHA deal, we just ordered another appraisal and the seller was willing to wait the month to get this all done and over with. And the second appraisal came in at value. If that appraisal actually did not come in for value, we would have probably split the difference and then gone to close. But it did come in, and I was actually there with that appraiser as a listing agent, and I showed him all the other offers on this property. And at that point we closed, no problems at all. That was a done deal. But normally we don't go to the point where you order a second appraisal. Normally it's just done with negotiations if the gap isn't too far. This was about a $40,000 gap on a $250,000 house, so it made sense for all parties to have it reappraised. But that's the exception again rather than the rule. If it's only $5,000 or $10,000, we just negotiate. And sometimes the seller will be like, nope, I'm not going to do anything. And if the buyer can come up with the money, we close. If the buyer cannot, they still have that contingency where they would get out of the transaction and their earnest money would be returned. So from the seller's perspective, I did touch on this for a moment. If I'm the listing agent, I like to meet the appraiser there, especially if there's multiple offers. When there's multiple offers on the property and it's above list price, I like to talk to the appraiser, make sure that person knows that there was multiple offers on it, and let them know that this was a very desirable property. This actually helps out sellers and kind of roundabout way the buyers, because all parties just want to see the property come in for value. So as a seller, we're now on the other side of the table. Once the appraiser goes through, we give them about a week to do their work, and I get told by the buyer's agent that yes, it came in for value, or no, it did not. If it came in for value or above, as the listing agent representing the seller, we don't get to see the appraisal. It doesn't really matter because all we want to hear is that the property came in for $400,000, going back to the example of Wauwatosa. Now, if it came in again at $420,000 as a listing agent and representing the seller, we'll never know about that. Doesn't really matter. But if it comes in at $390, 90, then the selling agent and me, the listing agent, have to figure out what we're going to do with the shortfall. But once again, luckily we haven't had too many problems with properties appraising out. There is several types of appraisals, by the way. If you do a conventional one, the conventional appraisal just stays with that bank on that transaction, and that's kind of how it goes. When it closes, the deal is done, everyone's happy. If you're selling your house and you get an FHA buyer or a VA buyer, which is just fine, there are a couple things you got to be a little careful about, because now these are backed by the government, but pretty much all loans are through Fannie and Freddie anyways. But this is a government program, FHA, VA. Being backed by the government, you have a higher level of expectations. Not only does it have to come in for value, it also has to check all the safety marks. Smoke detectors, CO2 detectors, extinguishers, railings on the stairs, and peeling paint. So if your house was built after 1978, you really don't have to worry about peeling paint, which is a nice thing. But if it's prior to, and your offer is FHA with FHA funding or VA funding, you do have to be careful about the peeling paint, especially outside. So this is why I like to meet with the appraiser as the listing agent and get told firsthand what needs to be done. And that does happen. A lot of times the seller will understand what the problem is, and as a listing agent, I'll explain to them, this is something you may need to be concerned about. So when we do get what's called a work order on an FHA deal, I say, hey, take care of this stuff. Generally, it's pretty simple stuff. Take care of the paint. Sometimes the seller does it themselves. Sometimes they hire someone. Doesn't really matter. So once we get it past all the appraisal and any work orders, again, with the FHA and VA deals, we are ready for close. Just a quick recap. An appraisal is required on all finance deals. The loan officer generally orders the appraisal. The buyer pays for it in most cases. It's going to be about $600 to $800, and you do this prior to close, but after the accepted offer and inspection in most cases. If the number comes in for what both parties agreed on, this $400,000 house in Wauwatosa, great, we're done. If the appraisal comes in light, buyers and seller negotiate in most cases to come to a middle ground, and we still move forward with the transaction. If the appraisal is way out of line and it's a conventional deal, you can order another appraisal. Or if it's way out of line and we can't come to terms, the buyer can get out of the transaction and get their earnest money back. With an FHA or a VA loan, you cannot order a new appraisal because that appraisal sticks to the house for 6 months. And even if the deal falls through and you get another FHA offer, that appraisal is already done. And the reason why the deal fell through because of an FHA appraisal, that might be a problem for 6 months. But as a seller, you can focus on getting a conventional buyer, and the FHA appraisal would no longer be valid. That being said, I hope that kind of helps you out and gives you a little insight to what an appraisal is and why it's so important. Thanks so much for hanging out. Keep it retro, my friends.